a live edition of Salt Talks here from the 𝐲𝐿 Global Alts Conference in beautiful sunny Miami, Florida. We're proud investors in and partners with 𝐲𝐿 on our series of global events that take place in New York, Singapore, Abu Dhabi, and then for the first time in Jackson Hole, Wyoming this summer. But again, welcome to Salt Talks. And Salt Talks is really a digital interview series with leading investors, creators, and thinkers, where our goal here is the same as our goal at our SALT conferences, which I described earlier, which is to provide a window into the mind of subject matter experts. And one of those subject matters that we're very enthusiastic about is the digital asset ecosystem. Digital assets is an area at the SkyBridge side of the house, as well as through our SALT conferences, we've endeavored to educate and grow that ecosystem, and we're very excited to have one of our partners on the SkyBridge side of the house here today, Steve Kurz, who's the global head of asset management at Galaxy, who will be interviewed primarily by my partner at SkyBridge and SALT, Anthony Scaramucci, who's our founder and managing partner. And I'll turn it over to Anthony, but I'll chime in here or there with some follow-up questions.
You're doing a good job with that.
I'm trying. I'm trying. You know, I was just winging that one.
Posture's good too.
Thank you. I could still work on the posture, but
I got to get there too.
Steve, how the hell are you? You're good?
Great to see you.
Yeah. So you've been through the wars, my brother, right?
Which one?
No, you've been through some
Lehman
trade.
one,
Yeah,
the
you've been
crypto
some.
ones,
You've been some trade fi wars, some crypto wars.
Yeah.
You're like a you're like
anymore,
a galaxy fighter, right? You're
Oh my gosh.
you're an interstellar human being. But let's go back to the beginning, okay?
Yeah.
How'd you grow up? Where'd you grow up? Where'd you go to school?
Yeah, sure. So I grew up in Houston, Texas, and then moved to Budapest, Hungary when I was 8. My dad's a Hungarian immigrant to the United States, and so we spent some time there as the country was coming out of communism. So he was one of the few people that spoke Hungarian and spoke finance, and so he helped the central bank come out of literally, decades of communism. And so then my mom won over, and we moved to Western Maryland, more cows than people. So,
So what town?
Smithsburg, Maryland, so literally just 5 minutes from West Virginia, and it was a really interesting difference than living in New York, going to Cornell, spending some time in finance, and gave me a good lens that I hope I still hold with me. But it was it was just a very different upbringing than a lot of my peers.
All right, so you're at Cornell.
Yeah.
You decide you want to come to work in New York City on Wall Street. Your first job is where?
First job's at Lehman Brothers. I actually was going to drop out of Cornell for a worm poop company called TerraCycle. And this is important because the Lehman guys, they loved Cornell. It was a good, they could recruit from there. And they actually saw an article about TerraCycle.
For viewers and listeners, tons of senior people from Lehman
That's right. You got Jerry
were
Wade,
from
you got
Cornell.
Tom
Exactly.
Marino,
So they had a whole,
they
that whole freight
system.
train of people coming in and out of Cornell. Yeah.
And to their credit, so I'm sitting around, selling worm poop at Cornell, thinking about dropping out. We're in the Daily Sun or Cornell Daily Sun or Ithaca Journal, and the Lehman guys saw and they wanted to meet up. I said, I'm never going to work in finance. And so they set up an interview. I said, look, I'm dropping out of school. They said, don't do that. Come have an internship in New York, and I loved it. So I kind of hard-tacked into finance, and then thought I was going to the best possible job on Wall Street, and that was in May of 2007. And I was there for about a year. And then
it's about when you were leaving, right, Anthony?
So I left actually in March of 2005,
really?
and we have similar stories. So I had sold my business to Lehman. They were great guys. I loved the firm, but I always had the entrepreneurial bug.
Yeah.
So I went to Dick and said I was starting SkyBridge. Could he help me? And he did. He gave me $10 million of balance sheet capital. And then I did something that I was told to do. And we can talk about this. I had all these options, and I had stock in Lehman Brothers. And so I petitioned the management committee to please let me keep the options, not force my sale of the options upon departure, because I wanted to hold everything. I thought Lehman stock at that time was about 30. I thought it was going to 300.
Yep.
And so the management committee said, no, you're technically going to a competitor. We have a fund of funds. And so they flushed me out.
Yeah, wow.
And they sold me at 40. Now, you know the rest of the story. The stock went to 89, so I wanted to stab myself in the eyeball with a butter knife, okay? But then it went from 89 to 0. And so it was one of the luckiest things that ever happened to me that they flushed me out of it. So what does that say about risk management? The things that we think we know for certain, we actually don't know, right? I thought Lehman was going to 300.
How about this? The worm shit company did 50 million in revenues last year. Lehman did 0 last year.
Yeah, amen. Well, SkyBridge is still here. Lehman, we unfortunately don't see anymore. So now you go from Lehman to where?
So I went to work for Mike Novogratz. He ran a macro fund. Obviously, the Fortress guys are well known in the hedge fund industry. It was a different league for me. I showed up in my Brooks Brothers suit that was too big, and this, this 2 minutes in, I was like, this is not the same as what I walked away from Lehman Brothers. Just a different level, different approach. And so I spent 5 years at Fortress in Singapore, in London, in New York, some strategy work, some product specialist work, some sales work, and really got an education in asset management.
And Lehman was part of the IPO for Fortress, right?
Yeah, and then, I worked for Jared Waite, who actually kind of, I think he led the IPO.
Guy.
Yeah, absolutely. Taught me a lot.
All right, so Fortress to where?
And then I went to work for Bart McDade, who was the president for the last 93 days of Lehman Brothers, and he wanted to create a nice 15-person firm that was high integrity, credit focused, and to the entrepreneurial point, I didn't want to work at a big company, and Fortress was becoming a big company. So started that with Bart and with Alex. We built it to $1.5 billion of AUM, and I did that for 5 years before I got the bug again and quit to go start a virtual reality company. So I've had this pattern of kind of just, once it gets easy, I start something new.
What does that say about you?
Masochist, I guess.
You like pain.
How do you explain staying
like
in crypto for 6 years?
You like uncertainty.
Yeah, I just think that when the ground's moving, I want to move, with it. And I remember feeling when I left McDade in 2017, nothing against credit, nothing against those guys. I just felt like the world was changing, and I was too young to coast.
Okay.
And I wanted to move into tech, and that's really what got me.
So how
into
did
crypto.
the VR business
Well,
go?
it was fun. I got my wife to quit Blackstone. We moved out of New York. I quit my job. We traveled around the world. We got married.
Is she still your wife? I'm just checking.
So this comes into this comes into play in a minute. I mean, we moved to the West Coast. 5 months into building this company, Novo calls me. He says, "You got to come back to New York and start Galaxy with me." So I'm agonizing, laying in bed. I'm like, "Fiona, we got to go back to New York." She's like, "What are you talking about? You're crazy." To her credit, she actually joined Galaxy. She helped us go public. So she was a partner of mine at Galaxy for a year. We decided probably didn't want to do that for more than a year. A little crazy to have both of you in crypto, and I stuck around, and she moved back to traditional finance. So yeah, we're still married. We got 2 kids.
So did you join Galaxy because of Mike Novogratz, or you had an apparitional light that dawned on you that crypto was going to be part of our future, or why did you join Galaxy?
I got a lot of faith in Mike. He's really great at seeing the big picture and synthesizing information and seeing around corners. He first said, because I said, look, I started my own company, I can't do it. He said, learn about Bitcoin, and if you actually spend time learning about Bitcoin, intellectually honest, and you're not interested, fine. But I want you to go through the process. So I came in, I met some of the early young crypto guys. You can't unsee it, you know that. Once you learn about Bitcoin, you see the problems in the world. So Bitcoin drew me in, but Mike drew me to Bitcoin.
Okay, I mean, it makes sense to me, but this guy doesn't like crypto, but now all of a sudden he's starting to like crypto. He didn't start liking crypto.
He's obviously hyperbolized.
Is that you? Or did you have the apparitional light reaction?
No, I got it right. I got it right away. I mean, to my dad's point, like my dad's traveled all around the world. He's seen what happens when monetary systems get debased. He believes in math and computer science, which is what Bitcoin is, and you don't really need to know much more than that, really, right?
I just want to state for our viewers and listeners that was
I would
fake.
like to correct
that
the
was
record.
Fake news from John Dorsey. I've
never
hyperbolized anything in my life. Okay. All right, go ahead, John.
John, do you have
I
some
would like to
questions?
correct the record, okay?
Okay.
Obviously, I own digital assets. I'm still at SkyBridge after our deep foray into digital assets, so it's definitely not.
How long have you guys been working
Our
together?
several near-death
9 years.
experiences. We've had
9 years.
We've had like Capital Digitalis perform to the heart of SkyBridge as we were trying to survive. Okay,
But
go ahead.
what I
You
would
guys have
say
been
is that
resilient. I mean, it's impressive.
Well, we're not going
Well,
anywhere.
he's like a nuclear cockroach. He's like
There's
fallen
no
down,
doubt about
gotten
it.
stomped on 50 times.
We're
but
gonna
he's
crawl.
still
We're gonna
somehow-
crawl out of the
Hey,
rubble.
that's Bitcoin, right?
Amen.
But Bitcoin always resonated with me as the the cliche digital gold narrative. It's a finite supply, non-sovereign currency in a world of dysfunction and money printing and excessive spending. It is something that people around the world can hold and have faith that it will stay the same supply and that the value will be somewhat stable. I would say some of the other more speculative aspects of the crypto world turned me off a little bit. Not that I haven't dabbled in NFTs and things like that, but I thought at the height of crypto, a couple of years ago, I thought there was a lot of excess.
Yeah, that's true. But two things can also be true. Like it wasn't just Bitcoin for me. For maybe it was the reason that we talked about the entrepreneurial thing. My thought was love Bitcoin, love Mike. This makes sense. This stuff might be wrong, but what if some of it's right? That was sort of my mentality, and all of it doesn't have to be right. 5% of it, 2% of it has to be right for this to be a good way for me to spend my time. And at that time, you couldn't prove it. there's no, you were sort of imagining things. Well, if Ethereum does this and this happens and then that, you couldn't have a rational conversation with a credit investor and be like, this is how you model it out.
So you have the genesis period of Bitcoin and digital assets.
Yeah.
And then you have the disbelief from the traditional finance people. And then you have all that skepticism, and then you go through a few hyper cycles.
Yes.
The most painful one for us thus far was the November 2021 hyper cycle.
Brutal.
And then we had all the fraud and all the deleveraging. So where are we now? Are we in a more mature phase? Are we still in the genesis period? Where would you say we are right now?
I'm not. I guess I would say I'm happy that it happened, as painful as it was. If that had happened when we were not $1 trillion or $2 trillion, it would have really hurt people, and it would have really hurt the potential of crypto. So, we took our medicine.
Saying the overall market cap of crypto being at that high.
Yeah, it was not insignificant, and people did lose money. But it showed that we as an industry hadn't done a good enough job of avoiding some of the things you just mentioned, and we needed to take our medicine. There was a lot of hubris, there was a lot of ego, there was a lot of nonsense, and so I kind of think 2022 was cataclysmic. Obviously, the first quarter last year was terrible. Last year was about digestion, right? You had Binance being resolved. You had some of the court cases working out. We were chosen, thankfully, to manage the FTX wind down. We're really grateful for that opportunity. So cleaning up the mess is how I'd say 2023 was. And what I think people miss about the Bitcoin ETF now, everyone says it's so great for Bitcoin. BlackRock, Invesco are not going after the Bitcoin ETF just for Bitcoin, right? And it's not just about tokenization either. If you make the tokenization bet and the Bitcoin bet and the Ethereum bet, you're really making a financial infrastructure bet. And so to me,
and our world of financial infrastructure is changing, and the way we transact with each other is going to change.
If you're coming to this space with a blank slate and you ignore all of the bias and the things you've heard in the headlines and the froth, and you just start with where we are from that lens, it's almost impossible as a thoughtful investor to say I shouldn't be involved. There's something you're actually not being honest with yourself. And so it's hard to lose the brain damage of the past, but I think that's what crypto people need to do, because the world changed like that. Everyone's business model, it's much more competitive, and if you haven't woken up to that, you're out. And that's a good thing, actually.
I think that's the first time that FTX has been mentioned. I haven't gotten like a skin rash or some type of psoriasis buildup.
Oh, God.
Where are we, to the extent you're able to talk about it, where are we in the disposition of FTX's assets?
Yeah.
And where do you think we go? I mean, is this like Mt. Gox, where it goes on for 12, 13 years?
Yeah.
Is it...
Well, you got to give John Ray a lot of credit. I mean, he did Enron. He's a real guy. Obviously, there are things that we can't talk about. But what I can say is that they have been incredibly thoughtful and methodical about segmenting things out. So you got the liquid crypto, you've got the venture, you've got the exchange, you've got the trust structures, you've got the venture portfolio, and they've got a real process going. And he's been able to get a work stream with the UCC, with the ad hoc committee, that's been very constructive. And without going into details, we've been pretty aggressive in the run-up at getting through a lot of what needed to be got through, and our job was to do it quietly and professionally, and I'm happy to say that we've done it.
But this is on the public record. They still own a ton of Solana, right?
Well, there's the Solana and the locked Solano, and we've been opportunistic, let's say, on the way up with Solana, and I think we're in a really good spot with the estate on that.
But they have a lot of locked Solana, right?
That's true. Yeah, that's true. But I think Solana at 100, and Solana having gone through this nuclear winter, I think Solana's established itself as a blue chip crypto. Right, that's just happening before our eyes. They're now in middle school if Ethereum's in high school and Bitcoin's in college. Like, getting to middle school is really hard for any crypto asset. So I just think there's a buyer base in Solana that's going to support. People are going to want that locked Solana. Is my point.
Okay.
It's a different
are we allowed to ask prediction questions here? Right. This is our podcast, right? We do whatever we want. Right? So we're here a year from now.
Yeah.
And you're drinking out of an 𝐻𝐸connections mug.
It's a nice mug.
I have nothing in my 𝐻𝐸connections mug, but that's fine.
You finished the whiskey
that's okay.
already.
That's all right. Well, yeah, I finished the vodka. Okay, so where is Bitcoin a year from now?
There is no way that the ETFs, I think the ETFs are already 3% of the 21 million Bitcoin supply, and we're 2 weeks into that. You just got to hold that in your mind. There's no way between the halving and the ETFs. We run an ETF with Invesco called BTCO. We are focused on LATAM, we're focused on Asia, we're focused on Europe, we're focused on the wealth channels. that contextualization in a portfolio hasn't happened. You've never had it in the model portfolios, you've never had the solutions teams focused on it, you've never had the regulatory check from the SEC, even if they did it grudgingly. So supply is not going to, so demand is not going to go up overnight, but a year from now, it will have gone up, and you'll have a steady cadence of buys from the ETFs that are hundreds of millions of dollars. You'll have the halving that had happened that reduces the inflation rate to 1% of Bitcoin, and it'll be less volatile, but still volatile, and you're probably, you know, a little more than double where we are today.
Okay, so nearing 100,000. What about Solana?
I think Solana, the question for Solana still has to prove itself a bit on the tech side. They've had zero downtime on their network since last February, which is a huge achievement for them. They're playing to be the efficient, fast cost blockchain that just is everywhere. And they're doing a really good job of executing on that roadmap. What Solana needs to do to be multiples of where it is today, they need to follow the same institutional path that Bitcoin and Ethereum have followed. So you got futures, CME futures, Bitcoin and ETH have that. Then you have OSC approved ETFs, Bitcoin and ETH have that. Then you get the futures ETF, Bitcoin and ETH have that. Now we've got spot ETF in the US, that's next for Ethereum. Solana hasn't even taken that first step. So while Solana is a major in crypto, it hasn't taken the path to becoming an institutional investable asset. That's probably what next year is going to be all about. I don't know the timing of that, but if they can achieve that in addition to hitting their tech milestones, Solana got a ton of upside. They got to execute.
And just for our viewers and listeners, so in order for an ETF to be packaged, Bitcoin is deemed a commodity.
Correct. Yeah.
Ethereum has to be deemed a commodity. Is that correct?
Yeah. Well.
And where's the SEC's position on Solana?
Well, the SEC's formal position is vague by design. I think in a year we may have a different commissioner. I don't think that anti-crypto is actually a Democratic Party platform. I'd love your take on it, but I think if you go to Hakeem Jeffries and if you go to Gavin Newsom, if you go to Maxine Waters, it's a very different lens than Elizabeth Warren and Sherrod Brown. And I don't know why you'd hate crypto. You can't hate crypto so much that you're willing to give up the digital rails that are going to carry the dollar dominance forward. And so there's just a wisdom that's missing. And I think that, I know you're talking about Solana, but it's all tied up in the same thing. If they can't understand that this is about the future of capital markets, and therefore it's a national security imperative, then forget it. We've got a whole different bag of issues. I'm not even talking about DeFi. I'm just talking about how in the US are you going to build the rails that are going to allow the dollar and other assets to seamlessly move when everyone else in the world is doing that. And again, you can't hate Solana so much that you torch that. That makes no sense. And I think most people in Washington get it, but there are a few in this administration that don't, and we've been held hostage by that.
I got a question about Galaxy. You guys have this $5 billion under management. You're one of the most successful crypto asset managers. Obviously, we're all bullish on digital assets broadly, Bitcoin, various other tokens. When you guys are thinking about how you provide value to an LP in your funds, what's the approach that you guys are taking that's driving your alpha?
There's a couple principles. One principle is, and we've been non-negotiable on this, like we haven't traded on exchange at all with our asset. We've always gone OTC, direct to cold storage. That helped us avoid FTX. There are very few places that we actually go, so we avoided Luna in the asset management business. So avoiding the pitfalls and not doing stupid stuff is actually pretty hard to do when the world's going crazy. I learned that from Lehman Brothers. I learned that from Bart McDade. So that's been kind of our philosophy. And then underneath of that, we don't think crypto's one thing, and we don't think that everyone approaches it the same way, so we're a platform. We want to have venture funds, we want to have active funds, high vol and low vol, we want to have passive funds, and we want to be able to be opportunistic and help out an FTX estate. And I think if we do that really well, and knock on wood, we're doing an okay job, that's going to take care of itself. And the real bet that we're making on the asset management side, AB put out a really good report. They said it's a cottage industry, crypto asset management. 50 billion is what they said in the fall. That's supposed to be 500 to 600 billion in 5 to 6 years. And the ETF is the catalyst for that to start to happen. So that's what I'm thinking about. How do we take our share of that and be a part of driving that forward over the next 5 years? And the way we do it is we deliver returns, we don't screw things up, we do what we say we're going to do, all the things that every asset manager that has integrity does. So it's kind of a stock answer, but it's really hard to do that in crypto, as you guys I think know.
And I think one of the next challenges, as you said, the SEC has begrudgingly approved Bitcoin ETFs and thus blessed the asset, and I think inevitably they will lose, I think, what are going to be inevitable court battles around an Ethereum ETF and potentially future coins. But what do you see as the next wave in terms of big developments that take place in the crypto universe?
Well, on the institutional side, even though it's obvious, we're just getting started, right? Invesco's our partner. Invesco's the second biggest issuer in the ETF issuer in this race.
Yep.
And those guys, I mean, they have so much infrastructure and ground game, and it's just getting. That's what people are missing. Crypto's so fast. You know, everyone in a second, oh, this is what's happening. In a week, this is what's happening. This is about a year, 2 years, 3 years down the road. Look at GLD. I'm sure you guys have done that analysis. That story is going to be a major story now and in the future. The degree to which those companies like Invesco are talking about the future of capital markets and leaning into these other things are going to be, the key drivers of how far we can go with that. And I think we're going to be surprised to the upside. That's my view. So we're excited about that partnership. On the crypto side, I really think that you've seen AI capture the attention, crypto 2 years ago. You need both of them, right? AI is this top-down mechanism of control. Crypto is this bottom-up, almost libertarian thing that is protecting our privacy and that kind of thing. If you didn't have crypto driving forward in the last 5 years, you wouldn't have had all the ZK-proof technology work that's been done. You need that ZK-proof stuff to keep the models honest. You need it to make sure that it's actually Anthony Scaramucci who's saying something on TV and not someone else. That's going to be a reality of ours in a year. Right?
John wishes it was somebody else saying something on TV, but
we're going to have fun with that, I think.
This is actually AI Anthony Scaramucci. We
that's why I'm like mostly muted here. But my question to you is, you're a young guy. You've seen the whole landscape of traditional finance and decentralized finance. What's your message to people that are missing this? What's your message to the skeptics? You mentioned Sherrod Brown or Elizabeth Warren, but how about the traditional finance skeptics? There's a guy by the name of Jamie Dimon. I don't know if you've ever heard of him.
A lot of friends who work for him. You should see our text arguments about this. I also have friends at Vanguard. It's,
So a lot of people working on crypto within JP Morgan.
What's the message?
Well, the message to my friends is I'll answer it in two ways. The people working under those guys don't agree. So I think anyone I'm 38 years old, anyone who's under 40 almost uniformly has a view that that's not right. And that in and of itself in a generational wealth transfer era is important and worthy of note. So the arrogance of telling the younger generation that's not that young anymore, this is how it's supposed to go, I think is something. What I would tell people is ignore the noise and focus on one or two things that are real or that are at least developed in the crypto space and just start there. When the internet happened, our job at Galaxy isn't to defend crypto, just to be clear. Crypto's whatever the world wants it to be. The internet was whatever the world puts into the internet. You don't defend everything on the internet. You focus on the few things that matter. So I think it's a distraction point. People get distracted by a lot of the nonsense in crypto, and that's because crypto is noisy and you got a lot of shitheads and you got a lot of people that make stupid decisions, but there's a lot that's real, and I think the mistake is calling it all one thing.
So it's 3 years from now. I'm going to buy stock in Apple Computer.
Yeah.
Is my Apple stock tokenized?
I think so. Yeah.
Is it on my phone? Do I have a smart and secure wallet where my Apple Computer stock is right there on my phone?
I think so. Yeah. And there's going to be so much. There's already been so much work on. It's only going to really scale when no one really thinks about it being crypto or Web3 backed or anything, and that integration is much closer than we expect. What people have been quietly doing in the last 2 years behind all the financial aspects of crypto and the noisy fraud of crypto is they've been building. Tens and tens of billions of dollars was put into venture in crypto in the last cycle, and you have passionate young entrepreneurs, the smartest coders in the world that have, what's different this time around is they're solving known problems. 6, 7 years ago, you were sort of saying, well, again, is it going to be, are we doing modular blockchains? Is it a theory? Like, no one really knew. And now you need compliance, you need AML KYC, you need better UI UX, you need the integration of there's a company we just invested in called Mesh. It's all about an app that allows you to take your Venmo balance and buy crypto through Coinbase in a seamless way that's protected. That's the start of what you're talking about. And they're already there with the technology. So it's just a matter of how that all kind of plugs in and where scale really takes hold and who wins that race. So I think for sure in 3 years we'll be there. Yeah.
You talked about Invesco, BlackRock, integrating likely Bitcoin into some of their macro models. A lot of these big asset managers, it's going to drive huge demand for the ETFs just by integrating Bitcoin into an overall asset allocation. What about institutional LPs? So we're here at the iConnections Global Alts Conference. There's there's sovereign wealth funds here, there's pensions, endowments, foundations. That crowd, from our experience, has been sort of allergic to digital assets to this point. They've done some crypto venture, some of it's gone okay, some of it hasn't. But I think now with the SEC blessing Bitcoin through the ETF, you might see a little bit of a change of their tune. Do you agree with the notion that some of those players might start sniffing around coins and digital assets, or is it still too early?
Well, so you're right. It's been venture and basically passive, which is to say Bitcoin and maybe some ETH, and so that's how we built our asset management business. Only now are we really focus on, when you have exchange traded products and options on them, and then you got the underlying, and then you've got companies, public companies like Galaxy, like Coinbase that you can go long and short, you got credit instruments, you're starting to build a toolkit where you can actually have a hedge fund. So I think the biggest surprise over the next 2 years is going to be that belly, that liquid active space is finally going to come to the forefront. People are uncomfortable in the LP seats becoming portfolio managers, let alone around 80 vol assets. And so some of the way it's going to happen is through existing multi-strat portfolios, legacy asset managers, and I don't mean that with prejudice, like it's just going to happen and they're not going to feel like they have to make the call. And then some of it's going to happen because you're going to have much higher, we screwed it up. Active management in crypto was liquid VC, that's don't worry about it, it's liquid, it's going to be fine, down 95%. Doesn't work for LPs, doesn't matter that it came back. They can't live in that world. We screwed it up by saying market neutral funds. There's no market neutral funds in crypto, right? It's the same thing as Lehman Brothers. You had contagion on the back end, right? And so we have to be honest about what's possible, and that's the starting point. You have to be honest about volatility, and you have to be honest about where you won't go and where you will go and the trade-offs between that. And a lot of asset managers haven't done that. So I think the Bitcoin ETF, what's going to happen is by June, July, you're going to have Bitcoin higher. It's going to, who knows until then. Everyone's going to say, wait a minute, I missed on that one. And then by the fall, they're going to start doing work, and maybe by December you get allocation. So unfortunately, it's going to take a while still, but I think it's different this year because of the ETF, and it starts that process.
Yeah, no, we observe the same thing in the context of our conferences too. It's starting to become not a non-starter, but sort of how do we start doing more of the homework?
Yeah, and you need SkyBridges. Hopefully, Galaxy is a part of that. You need people that are talking in a rational way about crypto. That's really what it's all about, and contextualizing it for these guys. And in the same way that the wealth, the army of salespeople at Invesco are going to go and contextualize Bitcoin in a portfolio with BTCO, we need our sales teams on the alt side to be contextualizing it in an alts portfolio.
What I like about your messaging, though, is that let me be the naysayer for a second. I think a lot of these people don't like it because it's speculative. But what I like about what you're saying is it's actually, some of it is speculative, but there's a rail system being made. So if it's 3 years from now and I'm buying a meal here at the Fontainebleau, what is the credit card charge from American Express, MasterCard, or Visa? Or am I doing a wallet-to-wallet transfer with the hotel?
I actually think it's going to be, I think it could be all of the above in the same wallet. Right? And it's sort of your choice, right? Do you want the points for Amex, or is there a better incentive mechanism around the token, or has Amex figured that out? Like, I don't think it's going to be either or. I really think you're going to choose your own adventure through the same application.
But there'll be more options than I have right now.
Options. Yeah, and I think it's going to be seamless, and I think it'll be, we've talked about Delta Miles, and all that's going to just find its way to these rails at the same time. And I think 3 years is actually the right timeline. I'm glad you're asking it that way, because everyone says 5 years, and that's too far, and 1 year is not. It's probably somewhere in there.
Yeah, like you said, I think when crypto really arrives is when we stop talking about crypto, and when people just take it for granted, it's embedded in our daily lives.
Yeah, Bitcoin's already getting boring. I mean, from a crypto perspective, not from a traditional world perspective, but that's boomer coin's a real thing. I mean, that's
volatility will continue to go down as it becomes a more mature asset with the ETFs, as you talked about, steady flows as opposed to.
It already has, right? Just in anticipation.
Just very happy I kept my hair through this whole cycle.
Hair looks good.
The hair's hanging in there, but I was really worried I was losing it.
I got some gray.
I was also thinking about like getting a barrel and suspenders there at the end of 2022.
Oh man,
it
was really the first quarter of 23 that was terrible.
So the best year in the history of SkyBridge was 2023. But if you had asked me at the iConnections conference at the beginning of 2023, what was the year going to look like? I would say we're going to be at the bottom of the swimming pool.
Ron Biscardi didn't even want to be seen with Anthony because it was in the wake of the FTX debacle.
Ron Biscardi was like, "Oh my God, the taint of FTX is
I'm going to be diplomatic. We're good friends with Ron. And,
no, I love Ron.
We're
partners with Ron. It was a little bit of gun waving on his part. I forgave him for it. But
Yeah.
the question I have for you, are we out of that woods? Or are we going to see a 90% drop in crypto, 70, 80% drop in Bitcoin? Is Ethereum, or let's say Solana going to go from 100 to 10?
What I think the hard thing for crypto companies is not going to be that, or for crypto investors. I think that the competition changing so rapidly, as we're not yet in a full bull cycle, is going to create a very difficult operating environment for a lot of companies and for some investments. I think the 90% is off the table for the majors, because there's just so many people that are looking to build a long position over time, and it's just, you have a use case in a lane. But I think there's a lot of crypto companies that are still going to go out of business. I think a lot of crypto funds are going to go out of business, and I think a lot of crypto coins and projects are going to go out of business. And I don't want that to happen. I just think it's, if you haven't woken up to 0% fees on ETFs and what that means for retail exchanges or any of it, right? Or even in the US, look, our policy in DC is very difficult for DeFi, and it's going to be for a while. When FinCEN's focused, that's really different than the SEC or the CFTC. So there are hurdles for pockets of crypto in the US that remain, and so it's going to be this really one-size-doesn't-fit-all world for the next year or two, and you got to really pick your spots where you focus your team and allocate capital.
See, there's the legend himself, Ron Biscardi now, and
he heard you.
He's okay now with the crypto stuff. Before, he was trying to drown me in the bottom of the swimming pool last year.
Listen, Ron, I had your back.
Because
you
of
can
my
run the tapes
involvement with crypto, but it's okay. I do love Ron Biscardi, and
we've come a long way in a year, though.
It did hurt. It did hurt my feelings when he was trying to disassociate himself from me, but it's fine. Okay, all right. So he still is. See that?
Yeah.
All right, that makes sense.
It's been a long year.
We were walking on the boardwalk here on Miami Beach on the way over here to record this podcast episode, and I was talking to Anthony about what you said, is that I do think not just a lot of protocols are going to fail, but I think a lot of asset managers are going to fall to the wayside, and I think there's going to be a few dominant players, and I think Galaxy is well positioned to be the BlackRock of crypto, God willing.
Well, I like Invesco because we're partnered with Invesco,
there you go.
But I will say that what BlackRock did in 2008 with some of the advisory workout stuff really helped their brand. I think that's what we're doing with FTX right now, and if we do a great job at that and we help clean up the mess, I think that's going to say a lot for us in the future, and we feel like if we can execute and prioritize, we're in a good spot.
And we were talking a little bit before we went on, but just the resilience of crypto. Me as someone who came at it from a skeptical
he's
angle.
almost like a crypto shrink, though. You know what I mean? I need more couch time.
Well, when you go through it yourself first, it's easy.
Yeah, I like it.
That's
Sorry, John, I interrupted.
Nova had me in his house for a 3-day meditation retreat before all this, and he's convinced that's why we are where we are and I'm where I am. So
just the resilience of crypto, everything that it's gone through. FTX, Binance, Terra Luna, all these things, and it really absorbed all that in a very healthy way.
What a story!
Yeah,
but that's resilient. I mean, look at you saw supply chains during the pandemic. I mean, we want resilient systems in the world, and we saw that was laid bare in many ways. I mean, when
free market,
China, this is when I really knew that I made the right choice. When China shut down Bitcoin mining, and 50% of the industrial capacity of Bitcoin went down overnight, and the next block hit. Okay, I get it. Right? I mean, that's a profound thing, right? It's never happened.
But isn't 10% of the mining still happening in China?
Yeah, well, look, and China's now gone the other. I mean, Hong Kong's opened up for the financial side, and they've loosened the reins a little bit. But my point is, that when people say shut it down, how? You can't shut it down.
Right.
It's anti-fragile for sure.
Yeah. That has value. Just that alone has value in the world.
Well, we'll probably wrap it up there. Steve, thanks for joining us here on Salt Talks.
You're a great guest.
Galaxy's been a great partner to SkyBridge.
No, we appreciate the partnership.
I appreciated the free therapy. I didn't have to pay any Satoshis for it. So
I'll be here all week. Go to a meditation retreat with Nova.
I can't go to a meditation retreat. My head would explode. But go ahead. Take us out, John. Take us out.
Well, thank you, everybody, for joining us here on Salt Talks, again from beautiful Miami Beach, Florida, during iConnections Global Alts 2024. Again, we're very grateful for the partnership with Galaxy and the partnership with iConnections, and this is undoubtedly the biggest and best global cap intro event in the world. So we're very grateful to be here and be working with iConnections. Reminder, if you want to watch any of these episodes of Salt Talks, they're all free and on demand on our YouTube channel and on our website at salt.org. We're on Twitter, or I guess I should say X, at Salt Conference is where we're most active. And as I said in our previous taping, it's always fun to follow at Scaramucci on X, where we get a combination of crypto commentary and election commentary. as we lead into what will be an interesting election
Just so you
season
know,
in the fall.
Darcy writes a lot of those tweets, particularly the anti-Trump ones.
The most inflammatory ones are from me.
Yeah, that's it. Yeah, exactly. He's blasting away using my address.
But I will say that Anthony labeling Gary Gensler and Elizabeth Warren the regulatory axis of evil, that was all of his doing. I can't take any credit for that one.
Or a regulated institution,
Yeah, exactly. And as Jeremy Allaire said in Davos, we have a little bit of a different PR strategy than a company like Galaxy and Circle, which does more business, I would say, with the government. But anyways, thank you for joining us here on Salt Talks. We'll see you back here again soon.